What if I told you that two investment vehicles can hold the exact same stocks, cost nearly the same to buy, but one could quietly cost you thousands over a lifetime? It sounds like a trick question, but it's a real scenario that trips up even experienced investors. You're looking at your brokerage account, seeing two options that both track the S&P 500, and you have to pick one. Do you click buy on the ETF or the mutual fund? The difference might seem tiny on the surface, but over 20 or 30 years, those tiny differences compound into significant amounts of money left on the table. Hi everyone, welcome back to Fiscal Beacon. I'm your host, and today we are stripping away the jargon to answer one of the most common questions we get: ETFs versus mutual funds. Which one should you actually choose for your portfolio? By the end of this video, you'll understand the mechanical differences, the tax implications, and the behavioral traps associated with each. We're going to look at real numbers and real examples so you can make a decision that fits your specific financial life. Let's dive in. First, let's clear up the basics because the terms are often used interchangeably, but they are structurally different. Think of an ETF or exchange-traded fund like a basket of stocks that trades on the stock exchange, just like a single share of Apple or Tesla. You can buy it, sell it, or short it throughout the trading day at fluctuating prices. A mutual fund, on the other hand, is a pool of money managed by a professional fund manager who invests in a specific set of assets. Unlike an ETF, you don't trade a mutual fund throughout the day. You only buy or sell shares at the end of the day based on the net asset value, or NAV, which is calculated after the markets close. So structurally, one is like a stock and the other is like a service. But why does this matter? It matters because of cost, taxes, and flexibility. Let's start with cost, because this is where the math gets interesting. Both ETFs and mutual funds charge an annual fee called the expense ratio. This is the percentage of your investment that goes to the fund company to cover management and operational costs. Here is the catch: mutual funds come in different.